Hello and welcome to traders and investors. Today is Monday, April 15th, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Let's draw pivot points for majors: EUR/USD and pound sterling dollar pair. Evangelos Poulakis would help us. Last week, on EUR/USD had a pronounced bearish character due to the significant downward momentum. Bears approached the influence zone of the monthly support at 1.0611. So the results of testing interaction may determine further priorities and opportunities. The levels past today act as supports, but due to their remote location, 1.0755, they are unlikely to be relevant in the near future. The main advantage on the lower timeframes currently belongs to the bearish players. However, the pair is trading within an upward correction zone. Now testing the central pivot point of the day, 1.0665. The next resistance in the development of the correction today can be noted at 1.0706. But the meeting with the weekly long-term trend, 1.0771, which governs the current balance of power, will be of greater significance. A breakout and reversal of the trend could change the market's preferences. If the current correction is completed and the pair returns to the downward trend's development, the bears focus on the passing through the supports of classic pivot points, 1.0599, 1.0558, and 1.0492. Last week, bearish players on GBPUSD managed to assert themselves by closing weak below the current supports, 1.2464, 2481, and 2503. The main task now is to maintain the achieved level. The next bearish target on the higher timeframes is the final level of the golden cross of the weekly Ichimoku cloud, 1.2383. For bullish players to re-enter the market under current conditions, they need to form a rebound from the encountered support zone, 2464, 2481, and 2503. At the moment, on the lower timeframes, the pair is developing an upward correction, with the main advantage belonging to bearish players. The market is currently testing the resistance of the central pivot point, 1.2476. Further development of the correction may shift focus on the resistance zone 1.2527 or 1, and then to the weekly long-term trend 1.2581. The trend determines the current balance of power, so consolidation about the reversal of the trend will contribute to changing priorities, transferring the main advantages to bullish players. The completion of the correction will direct the intraday situation for bears to work through support levels of the classic pivot points, 1.2394, 1.2343, and 1.2261. What about cryptocurrencies? For example, BTCUSD. Dimitrios Tapas explains. Bitcoin is trading around 65,350, above the 21 SMA and above the downtrend channel forming on H1 chart. In the next few hours, Bitcoin is expected to contribute to rising. In the chart, we can see that Bitcoin has decisively broken the symmetrical triangle pattern. In case of a pullback towards 64,000 USD, it will be seen as opportunity to buy. With target at 67,706. Above this area, BTC could reach 71,875. With a consolidation above 65,000 USD on the H1 chart, Bitcoin continued to rise with targets at 200 EMA, located at 67,700 USD. If Bitcoin encounters rejection around this area, a technical correction is likely to occur and will be seen as an opportunity to sell. On the contrary, if Bitcoin breaks and consolidates above 68,000 USD, the outlook will continue to trade higher until reaching the psychological level of 70,000 USD and even 71,900. A return of Bitcoin below 63,500 could change the outlook and is short term. It could reach 48 mirror level, 62,500. Below this area, it could reach the psychological level of 60,000 USD. And even up to 38 mirror at 59,375 USD. Our trading plan for the next few hours is to buy BTCUSD above the 21 SMA, located at 64,465, with target at 67,700. The Eagle indicator reached the oversold zone on April 13. Therefore, any technical rebound above 64,000 USD will be seen as an opportunity to buy. That's all for today. See you soon.